Hello, everyone, and welcome to today's video. I'm your trusted financial analyst, and I've been something truly shocking to share about Bitcoin. You might think you already know everything there is to know. Maybe you've heard it's just a bubble, or it's just too late to invest, or only criminals use it. But here's the twist: a hidden detail about Bitcoin's design could change your entire perspective on how to invest. Let's start with a quick recap. Bitcoin launched in 2009 as a digital currency with no central bank or government behind it. That alone sounds revolutionary, but there's more. Bitcoin has strict limits of 21 million coins. Once all those coins are mined, that's it. No more can ever be created. At first, people shrugged it off as a strange experiment, but over time, big investors and financial institutions started paying attention, especially as the price kept climbing. Why? The answer boils down to a classic economic principle: scarcity. Right now, the central banks around the world can print money whenever they want. That increases the overall money supply, which can cause inflation. Bitcoin, on the other hand, has a fixed supply, and that supply grows more slowly over time because of a special event called the halving. Roughly every 4 years, the reward given to Bitcoin miners, people who run the computers that secure the network, is cut in half. This means fewer new Bitcoins enter circulation as time goes on. Think of it like turning down a faucet. Each halving reduces the flow of new coins. If demand stays the same or even goes up, the new supply decreases. The price has a tendency to rise. But here's the part that's truly shocking. While many everyday people sit on the sidelines, major institutions are secretly stacking up Bitcoin. Big names like BlackRock, Fidelity, and certain hedge funds are either holding it or working on traded funds that let more investors buy Bitcoin easily. In public, they might say it's risky or overhyped, but behind the scenes, they're preparing for a future where Bitcoin could become like digital gold. That's the key point. This isn't just a fringe idea anymore. Wall Street is getting involved. They understand that if you miss out on a scarce asset at the early stage, you could regret it later. Now, does that mean you should pour your life savings into Bitcoin? Absolutely not. Like other investments, Bitcoin comes with risk. The price can swing dramatically. Sometimes it can drop by 50% more within a year. If you jump in with the mindset of getting rich overnight, you might end up panic selling when the market dips. So, how you can approach Bitcoin more safely and intelligently? First, think about your time zone. Bitcoin tends to move a 4 year cycle linked to the halving events. The halving events. There's often a rise when a crash, then a recovery. If you plan to hold Bitcoin for several years, you can weather those ups and downs and without panicking. Second, consider dollar cost averaging, or DCA. That means investing in set amount of money on a regular schedule, like every month rather than all at once. If you do this, you will spread out your purchase points and reduce the impact of pricing swings. Third, keep in mind that the importance of self-custody. Exchanges can be hacked or freeze withdrawals. If you store your Bitcoin on personal hardware wallet, you're in control of your own funds. It is also crucial to remember that Bitcoin is still high volatile has still a high volatility asset. If you can't comfort the big swings, you might only allocate a small portion of your portfolio. Some experts suggest anywhere from 5 to 10%. Even a small portion can potentially grow if Bitcoin scarcity truly kicks in, but it won't ruin you if the price falls. All of this leads us back to the secret that can't be ignored. Bitcoin's design, limited supply, plus regular halving creates a situation where demand can outpace the supply, especially once big financial players jump in. If you stay on the sidelines because of fear, you might miss out on what some people believe is the biggest financial shift in decades. At the same time, you have a stay smart manager you risk and not get caught up in the hype. That's how you can separate yourself from a crowd that make informed decisions. So is Bitcoin a gimmick or a future of money? That's up to you to decide. But I hope today's breakdown helps you see the bigger picture. If you found this video helpful, please hit the like button, subscribe, and next week I'll be exploring more artificial intelligence is transforming the Wall Street trading strategies so far. Stay tuned if you want to find out how AI might reshape markets faster than you think. I also want to hear your thoughts. Do you believe Bitcoin still has massive room for growth, or do you think its best days are behind us? Leave a comment so we can keep the conversation going. Let me know if you're on the team of Hoodle or you're still skeptical. There's no doubt the world is of finance is changing, and the more we learn from each other, the better prepared we'll be. Thanks for watching. Remember to be the shark, not the prey. Seize the opportunity before the major institutions swallow it up. Stay hungry for opportunity, stay smart with your money, and I'll see you in the next video. And thanks for watching.